Hey everybody, today is January 26, 2025, and today we're going to talk about the price of Bitcoin, where I see the price of Bitcoin headed for the month of February. Before we begin, please read the disclaimer. You can pause the video as you read it. Okay, so where we left off last time was around here. I basically said that there were two things I was looking for. First, I wanted us to hold 90,000, right? I said that if we didn't hold 90,000, we'd probably come down to touch the 100-day and plunge lower, right? And I said that I didn't want us to go down and retest this level because we basically spent the last 8 months going sideways, building support. So if we went down, that would actually be bearish. So what I said I wanted to see was I wanted to see us hold 90,000, which we did. And I also wanted us to consolidate more around this Fibonacci, right? Fibonacci levels are important support and resistance level, right? You can sort of see, if we zoom out to the weekly chart, how we tend to find resistance and support around these Fibonacci level, right? You can see this impulse move and resistance around Fibonacci, impulse move higher, resistance around Fibonacci, and of course the previous all-time high, double top here, right? Massive resistance, which we went sideways for 8 months last year, right? Building strong support before pushing up higher, and now we're here at this new Fibonacci level, around 100,000, right? So no surprise that we're facing resistance here. So it's going to take some time to build a level of support to push up higher, right? And that's what I said I was going to see, was that we're probably going to move sideways for a while, right? And that's what I was, my last video I said that January is probably going to be us moving sideways, building support on this Fibonacci level, and also just the psychological barrier of 100,000, right? So that's exactly what we're seeing. The good news is that we're still not overbought or anything. So, and we're also above the Fibonacci line, which is great. We're starting to, you see how there's a lot of like messy price action here. Like this is the market trying to fight to maintain this level above the Fibonacci, above 100,000. So the market's doing a great job right now, but we want to hold above the Fibonacci of 100,000 and just the psychological number of 100,000, right? But let's look at some more like macro data. So inflation numbers, CPI report, right? Again, CPI shows that we've actually been increasing for the last 3 months, which generally is bad, but the dollar is also a bit overbought, right? So it's kind of like went down recently. And you can see that here on January 13th, right? You can see this was also where the stock market reversed. So usually when the stock market does well, the price of Bitcoin does well because it's a risk-on asset that follows, right? And it also moves in inversely proportional to the dollar when the dollar comes down, right? As the dollar has been weakening, that's also given Bitcoin more strength. See how on the 13th, let me just go back to the dollar. Here we had the top on the 13th, right? Just like the market reverse, we saw Bitcoin reverse on the 13th, right? And this was the day that we actually plunged below 90,000, down to 89,000, right? But again, this was my support level. I said it was important to hold, and we did. So now we're above the Fibonacci line, and we're doing a great job holding this turning this into potential support before we push up higher, right? Now, before we talk more about the tailwinds, which I think there's a lot of, let's talk about potential headwinds. I've been talking about this a lot over the last couple of videos, which is the yield curve inversion, right? Uninverting. Now, we've been inverted since 2022, but last year we uninverted around summer of last year, right? So usually this is followed by recession, right? Not saying it's going to happen anytime soon, but this is a potential headwind. This could be a narrative that plays into a potential bear market in 2026 if we follow the 4-year cycle. The next bear market should be in 2026, right? Again, the Federal Reserve tends to cut rates. When they cut rates, there tends to be followed by a recession, right? Going all the way back to the 1950s. They're cutting rates right now, and they might cut rates if the inflation data comes down, right? CPI comes down next month on the 12th, right? But that remains to be seen. Let's go to some of the on-chain data, right? Or the graphs, right? So this is a 2-year multiplier. Again, we are in this is the type of price action you expect to see when the market is in a bull trend, right? We're sort of like where we are in the middle of the cycle before we have to blow off top, right? Before we kind of go parabolic. We're nowhere near, the market usually tops near or above this orange-red line, right? We're nowhere near that, and that line is around 250 right now. So this shows that there's a lot more upside for us to capture, right, in this cycle. Price cycle top indicator is my personal favorite top indicator. It's been very accurate, and this calls the top when the orange line crosses above the green line, right? So when it crosses above the green line, it's a signal to sell, and it's been pretty accurate so far. But as you can see, the way the price action is postulated, it's in between the orange and green lines, and usually that is in the middle of the bull cycle before we go parabolic, right? When the price goes above the green line, that's when you want to start to be careful and ready to sell, right? But we're nowhere near that. That green line is about 142,000, which means that there should be upside above 142 for the remainder of the cycle. So that's also positive. Golden ratio multiplier, again, you can see we're just below the green line, which is, again, in a very positive, bullish posture as we compare to the previous cycles, right? This is 2016, this is 2016, 2017, this is 2020, right? Usually when we go above the red line, that's when we want to start thinking about potentially selling. That red line's 142,000. So still a lot more upside potentially, right? Here is our price forecast tool, which combines all of these top and bottom indicators, right? And right now we're in the middle, which is, again, the same postulation as the middle of the bull cycle, right? And we usually want to think about selling once we start touching this red line. Now this red line is roughly just around 200,000, right? We're nowhere near that. We still have a lot of upside left, right? That would be a double from here. So all of these charts, these indicators, are telling us that there's a lot of upside potentially, that we are probably still in the middle of the bull market, right? And if we do follow the 4-year cycle, there should be more upside, right? Like I just said in the beginning of this video, I do expect resistance around this level because this is a psychological level, 100,000, and also because this is the Fibonacci resistance level, right? And we've done a great job defending 90,000. So what am I looking for February, right? What am I looking for remainder of this month, January and February, is I do believe we're going to continue to chop sideways, all right, and fight to defend Fibonacci level. This is a resistance level right now. We want to flip it to support. Once we flip it to support, it's going to rip up higher, right? You see all this volume is trying to absorb the selling pressure. Once that happens, I do believe we're going to rip up higher to 110 and above 120, right? Another thing, President Trump's inauguration, right, recently is very positive. I do think that he is a pro-crypto, pro-Bitcoin president, right? He recently announced he signed an executive order to do some research on a potential reserve digital assets stockpile, which may include Bitcoin and other cryptocurrencies, right? So that's positive. If they're able to come to agreement to create a reserve or a stockpile, including Bitcoin, that's going to push the price up higher, especially if they start buying. Of course, they have a lot. The government has a lot of cryptocurrencies, including Bitcoin, on their balance sheets that they seize from criminals, right? But if they start buying Bitcoin and adding to the reserve, that's going to put a lot of pressure to the upside. But overall, there's a lot of great tailwinds that lead me to believe that the price will go up higher, albeit a couple of headwinds that we went over, right? Potential recession coming up, perhaps in 2026, which would align with the 4-year cycle bear market, right, in 2026. But this year should be great. We went through all of these indicators, these charts that show that the price of Bitcoin is probably going to go up a lot higher, right? And yeah, we'll definitely update you on where that price could be going forward. But yeah, just to summarize, I do think that the month of February is going to be us trying to fight to stay above 100,000 and also above this Fibonacci line. So maybe something like this. Absorb the selling pressure and push up higher. And who knows, if the market does hit new all-time highs, which is, it's just there right now, if we do go up higher, I do think that's going to put a lot of upward pressure on Bitcoin as well. So a lot to be optimistic about. I do think this is going to be a great year for Bitcoin. It's going to go up to a lot higher, I think. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.